A very warm welcome back. We had a short break between the two sessions. This is the second leg of the event we are now dubbing the FinTech African Olympics, being participated by so many countries and so many people around the globe. So welcome back to the session. This session is focused primarily on the number two concern raised by every single stakeholder that we've chatted to over the last number of years. The first one being regulation, specifically around in a fintech space. And the second one, if you talk to any company, startup, corporate, government agency around the world, they keep referring to the lack of talent or the lack of youth armed with the right set of tools that are coming through the system, and they are potentially not job ready. So this is a very critical aspect, specifically in the fintech space. If you look at the research from around the world, technologists or technology skills has been identified as a shortfall in a short to near term future. On a personal side, I'm even pushing my 9-year-old to become a coder. Don't know if that's the right thing to do, but that's how much I believe in this space going forward. So I'll hand it over to Lisa, who'll be moderating this panel, and she's joined together by a whole brigade of rock stars. Over to you, Lisa.
Good afternoon, everyone. My name is Lisa Dosooye, and I'm Head of Skills at the Mauritius Africa FinTech Hub. Thank you so much, Makoi, for the introduction. And I hope that everybody, if you're in Mauritius, I hope you've had a chance to pick up a spot of lunch. And if you're elsewhere, I hope you've had a good short break between sessions. So my role at the Mauritius Africa FinTech Hub is as Head of Skills. And in that role, I develop skills and capacity building initiatives that help support the growth and development of the fintech sector in Mauritius. That includes technical education around fintech technologies, but it also extends to consumer education and awareness raising around fintech. In our discussions today, we're going to be exploring the challenges that face consumers in learning to navigate the complexities of this new digital financial landscape, and how that has knock-on effects the effects that a lack of literacy has for fintech startups who are trying to gain traction in the local marketplace. I'm joined today in these discussions by three great panelists who bring with them their experience and expertise in the application of digital financial literacy, fintech entrepreneurship, and policy development. So without further ado, I'd like to welcome today's panelists and invite them to briefly introduce themselves. And I'd like to start with you today, Jaki, if I may.
Sure thing. Thanks, Lisa. Hello, everyone, and greetings from Nairobi, Kenya. My name is Jaki Mebur, and I work with the GSMA, which is a global trade association for mobile operators. And the specific program I work with at the GSMA is called Mobile for Humanitarian Innovation, which specifically looks to accelerate digital and mobile solutions to support humanitarian programming. And there's also a very specific focus on financial inclusion and livelihoods for refugees and displaced population. And it's nice to be here.
Great. Thank you for joining us, Jaki. Lilian, Lilian, would you like to introduce yourself, please?
Yes, so good morning, everyone. My name is Lilian Makoi. I am a serial entrepreneur, co-founded Mipango app, which is a personal finance application where we provide the service of software as a service to banks to enable them to recommend products to their users, give AI-powered financial advice and financial products recommendations.
Okay, great. Thank you so much for joining us, Lilian. And last but not least, Peter, please introduce yourself.
Thanks very much, Lisa. I'm delighted to be able to participate in the FinTech Festival. I'm the head of the research department at the Asian Development Bank Institute, or ADBI. We are the think tank of the Asian Development Bank, and we're based in Tokyo. So we've been doing a lot of research in the area of FinTech, financial literacy, financial inclusion. We've been doing a number of surveys of awareness and usage of FinTech, particularly in Southeast Asia, and how that relates to financial literacy. So this is a very interesting topic for us.
That's great. Thank you so much for joining us, Peter. So when we get started in this subject, I think we need to really start by defining what we mean by digital financial literacy. I think people, have a general awareness when we talk about financial literacy, and these days also about digital literacy. But Peter, what do we mean when we talk about digital financial literacy, and why do you think that's important?
Yeah, I think we have to distinguish a digital financial literacy from both financial literacy and a digital literacy. Financial literacy is much more the knowledge of the traditional concepts of things like interest rates, compound interest, inflation, asset diversification. Digital literacy is basically knowledge about how to use computers or other digital devices. But digital financial literacy, I think, is very much related to the development of financial technology, or FinTech. And the definition that we proposed has 4 aspects. It's first the knowledge of FinTech products and services, their benefits and drawbacks. And if we look at FinTech, we see a number of different components. You've got payments, such as e-money, mobile phone wallets, crypto assets, remittance services, asset management, such as internet banking, online brokers, robo-advisors, crypto asset trading, alternative finance, such as crowdfunding or peer-to-peer lending, online balance sheet lending, that sort of thing, and also things like internet-based insurance services. So there's a whole gamut of products and services that people need to get familiar with. And then there are the second aspect is the new kinds of risks which are associated with these products and services. We have things like phishing, identity theft, unauthorized use of personal data, and also just perhaps more traditional things like how to deal with excessive debt or how to avoid getting into excessive debt. The third aspect is what are the ways to protect oneself from these risks? What sort of knowledge do you need to be able to identify those risks? And finally, what are the methods of redress? What happens if you do experience losses or other kinds of damages? What sorts of redress do you have in terms of consumer protection? So that it's these 4 different dimensions of how to deal with this exciting new area of digital financial literacy. And what we find also is that the level of digital financial literacy varies a lot between men and women, urban and rural, people of higher incomes or lower incomes, so that we do need targeted programs to help develop digital financial literacy.
Okay, great, Peter. Thank you. I think also I totally agree with what you're saying. I think it's very nuanced. I think also I'd add in another one there. I'd add in trust in technology as well. I think that without that, we need to build knowledge and awareness around FinTech products. We need to build this sort of financial literacy aspects. But another element is also this empowering people to feel trust in the technologies and to understand, as you say, where they need to go in the event of problems, consumer empowerment. Perhaps you could comment a little bit on the kinds of pitfalls that consumers may face if they have a deficit in digital financial literacy. Peter.
There are various kinds of issues. I mean, the main issue is the kinds of fraudulent experiences they could have, such as phishing or even simple things of people stealing PIN codes, for example, or something like that. And then you have the perhaps more complex issues of what to do about identity theft, or if your data is being used without your authorization. So there's a whole range of issues, and it does require a fairly sophisticated level of knowledge to be able to deal with those.
Okay, great. Thank you. It seems clear that a lack of digital financial literacy can have very potentially damaging effects from a consumer perspective. I mean, I think we've seen things come up in the media over the last few months, particularly post-COVID, people getting involved in, for example, investing online without really understanding how to use products and getting themselves into financial trouble as a result of that. We also have seen issues where people are, as you say, suffering from fraud. Jaki, as an entrepreneur building fintech products, how does a lack of digital financial literacy among consumers impact fintechs, entrepreneurs developing products?
I think that's more for Lilian, yeah.
Oh, sorry, Lilian. Sorry, I meant to say Lilian. Apologies, Jaki.
Yeah, so again, being in the space and industry for over 6 years now, I'd say I've experienced firsthand the pains and the gains of low digital financial literacy in my market, specifically Tanzania. So I'd start with the positive. So for us, for startups, that is an opportunity for us to create solutions that address this gap. So if you look at our market, out of 60 million people, only 13% are taking up formal banking services. But the development of the likes of mobile money, we are seeing that, again, them taking opportunity of the lack of financial literacy and financial products uptake in the country. They created a simpler product, banking product, and with that, they have achieved 56% market penetration. So for us, we are learning from M-Pesa and the success they've had, and again, capitalizing on the lack of digital financial literacy to create solutions, where we created now Mipango as a software solution to banks. And what we do there is really empower banks to move away from just being transactional or having a transactional relationships with their customers, and help them understand financial products and finance better. So what our solution would do to banks is enable the traditional bank apps to show users data analysis of their spending and income. We help them, give financial advice to their users to become active savers, starting with the basic of just saving for your emergency fund to, saving for a specific goal, like building a house or starting a business. We also help them create, e-wallets to help their users spend smarter and better, all the way to artificial intelligence guided advice and product recommendations. So we've made good progress with the banks. Again, still insisting on capitalizing on the lack of or the gap of digital financial literacy in the country. But apart from the good, the bad that we are facing, as an industry as whole is the need to educate the country before you can actually push a sale to the consumers. So you literally have to educate the entire 60 million population on what a specific financial product is and what it means to their personal lives, and why they should take it, how they should use it, before you can get to, hey, comparing benefits of product A and product B and why my product is superior to the other. So the challenge to us there comes to be, we have to spend a lot in marketing and awareness. So awareness more and then marketing later. So yeah, that's the challenge really in our market.
Right. Yes, I see there are challenges from both sides here. There's challenges from the consumers understanding the products and feeling empowered to use them and uptake them, and obviously for you as a fintech entrepreneur, as a provider, it creates this problem where it may limit the traction you can gain in the marketplace. Perhaps here I can bring Jaki into the conversation. Jaki, I know you've been working on developing a toolkit to help try and address digital financial literacy specifically. Can you tell us a little bit about that and how that project came about?
Sure. So the training guide is actually called the Digital Literacy Training Guide for Mobile Money Agents and Digital Literacy Change Agents. And I'll explain what all this is. So following up on what Lilian said, how do you train 60 million people in your product. It's quite an uphill task. And so the other question I would add to that is, how do you build up a digital financial ecosystem? What do you need to put in place to make sure that everyone is able to use your digital product, and then you have a thriving digital financial ecosystem? So the first one, of course, is to make sure that you have the right information given to your end users. However, the second part of this is also your access. How do your end users access your solution? So in most cases, you'll find that there would be agents in the communities. Either it's mobile money agents, or even for the various fintechs, some would have agent posts out in the various communities. So this curriculum is twofold. One, it looks to train the end users on the basics of how to use mobile money, and also the associated digital financial products that you can build up of mobile money. So first of all, I need to mention it's in partnership with Grameen Foundation and MTN Uganda. And initially the focus was in northern Uganda in refugee populations, because refugee populations mimic typical rural populations, in the sense that you'd have people living in some level of poverty, you'd have people with low levels of literacy, and then you'd have people who already have low access to digital financial services. So the purpose of this curriculum was fourfold. One, to expand the agent network. So the curriculum includes training for mobile money agents. It is a common challenge in rural and humanitarian contexts that you will not have many agents in the ground. I'll give you an example. So in Bidibidi refugee camp has about 300,000 people. And the GSMA State of the Industry report approximates that around the world, on average, for every 100,000 people, you will have access to 11 banks, 33 ATMs, and 228 mobile money agents. However, in Bidibidi, this was in early 2018, for 300,000 people, there was only 17 mobile money agents. So that was a clear problem, that there was a need to train agents from the refugee population. So expand that agent network. Second is increase livelihood opportunities for the refugees by adding agent businesses into their own existing businesses. So in Uganda, about 72% of the refugees already have some kind of business. So it was adding onto the business as opposed to creating a new agency business on its own. There's a whole other study that shows this is the best way to do it: integrate agent business into an existing business. And finally, it is to ease liquidity pressure. A common issue is when cash transfers happen, everybody cashes out. Why? Because there are not enough agents, and you don't know the next time someone is going to be around for you to allow you to get your cash. And then finally, improve the digital literacy of the end users, which was the reason why people were just cashing out and not using the cash in digital form, not going to the shop and buying in digital form, not saving in digital form, not using more advanced products like loans and investment opportunities. So this was the purpose of the curriculum. And I think it will be shared onto the chat for everyone to see if anyone is interested. And I'm happy to take further questions on this.
That's great, Jaki. Thank you. It sounds like a fabulous project having a real impact on the ground there. And yes, anybody who's interested in checking out that curriculum, we will be sharing it in the chat shortly. There'll be a link to where you can find out more about that. And if you have questions, it's a good point for me to remind everyone that please do submit your questions to today's panelists. You can do that using the AFF's main interface there, and we will try to make time to take a few public questions at the end of the session if we can. Okay, thanks so much, Jaki, for telling us a little bit about the project there. Can you maybe elaborate a bit on the specific areas that you identified as important inhibitors to digital financial service uptake? And how do the guidelines that you've developed address those challenges?
Sure. I think this was in, again, a humanitarian and rural context. So first of all was the long distance to both financial institutions, including banks, and to mobile money agents. And so what we're trying to do is build out a digital ecosystem that doesn't require a brick and mortar bank to be built next to people for them to access financial services. So give access to mobile devices and then train people on how to use them for more enriched financial services. The second one is digital literacy definitely hinders the access to digital financial services. Just the how to use it is a really, really big issue. And so end user education was paramount. And this was also one of the findings that we found. And finally, is a regulatory barrier policy. So, speaking from a refugee context, it was formal access to credit, formal access to banking facilities, and then formal access to mobile services had big barriers around regulatory issues. And also now, even as recently, as we were trying to recruit agents from the refugee population, there was a change in legislation that then changed the know your customer requirements to become an agent that left out refugees. So now we have to go back to the governing bodies and say, hey, your new rules are great, however, they've left out this particular population. So regulation and policy, I think, remains quite a big challenge. Those were the three big ones that we saw as key barriers to access and the uptake of digital financial services.
Thank you, Jaki. Thank you. Lilian, I mean, you founded Mipango in Tanzania as to help tackle financial literacy specifically from a digital standpoint. So what inspired that initiative, and what do you think is the responsibility of fintechs themselves around the product, teaching around the use of their products and services more generally?
So the inspiration behind the product was, again, from a personal challenge that I face with my co-founders. I mean, if you look at any or ask at any 10 Tanzanians, adult Tanzanians, only one person would have financial literacy from or was educated, given financial education from a young age. So this got us to, or gets us to a stage where you're an adult, you have made some income for 10 years or so, but you don't have savings, you've not made any investments that are sure or give you a certain future or certainty of your future. And the products that we take up would at most be mobile money and a bank account for receiving my salary. But then, yeah, so realizing that, or analyzing my life after 10 years and realizing that I've not taken up most opportunities to improve my personal life financially, I saw the opportunity to create a solution for myself. And by doing that, we created a solution that would now impact every other person who is facing the same challenge. So that's when we created the solution, and we rolled it out as an app for a year or so, and saw the uptick, but realized there's bigger opportunity or to impact more people is working with banks and enabling them offer the same service to their existing customer base. So I'm saying to answer to your second question of the responsibility of startups to help our users take up the product or understand the product, I would say, in as much as we'd have it in our marketing budget somewhere to do awareness campaigns and marketing campaigns, we can only achieve so little if you're doing these efforts individually. If I was to ask or name one thing that would help all of us, and I've run a mobile micro health insurance product before and still face the same challenge I'm facing now with my second step, it would be a joint initiative, either funded by all fintechs and the major financial institutions, including the government somehow, that would just address financial literacy, just address digital literacy. Yes, there are initiatives that the country is pushing, or government is pushing to ensure more people are buying devices, affordable devices are pushed out there. Just last week, the minister of telecom passed the policy that devices would not be charged VAT tax to make them more affordable. So there are efforts, and we are seeing potentially 80% of the population will have access to smartphones and basic phones, which exposes our products to our users. But that's just one aspect of the bigger challenge, like Jaki mentioned. Yes, they'll have devices, but we still have to address digital literacy, how they can use the devices. And then the second part of financial products. So before I even talk about Mipango and how it will impact you, I have to talk about banking, why you need banking services, why you need to save, why you shouldn't save your money under your mattress. And then they have these valid concerns of, I'm banking my money with you, then you're still going to be charging me X amount to you to save my money. So they have concerns that needs to be addressed. And if the addressing itself has to be tactical, strategic, because you're talking to a person who does not have, an average Tanzanian here would have primary school education. So you have to address their concerns in a way that they can consume it and then still have them trust your products. So I'm saying joint effort would help to raise the awareness and basic financial literacy concerns. And then as startups and in partnerships with the bigger corporates, we can now go to marketing or do the secondary level of awareness and education. But primary level, we need joint efforts.
Thank you, Lilian. Yeah, I think that makes a lot of sense. I think, it's inherent for fintechs to educate around their platform, but like you said, for small entrepreneurs in particular, that's a heavy burden and a huge task when faced with the numbers and with the huge deficit of knowledge. And maybe I can bring Peter into the conversation at this point to give his perspective. I mean, where do you see the role for educating around digital financial literacy? Is this something that the government should be doing? Is it something that should be a collaboration? As Lilian was mentioning, what's your view here?
I think you have to look at where the expertise is, and you have had governments developing programs for financial literacy, and they've typically done that either spearheaded by the central bank or the financial regulator, and perhaps with the collaboration of some of the banking sector, something like that. But the real expertise on a fintech is in the fintech sector, and so it seems to me to make perfect sense that the fintech sector and the big tech sector should have a major responsibility in carrying out financial education in the digital financial area. So that the question is, how can they be incentivized to do so? And perhaps some kind of regulatory requirement is needed to push them in that direction. Now, as of course was mentioned, big firms are probably much more capable of doing so than small firms. So there has to be some assignment of responsibility on that side. But the other point is that the big tech and fintech firms can devise the apps, which would be a perfect vehicle for that kind of education. And of course, they have the customer base right there. So it seems to be a natural fit that the fintech companies themselves ought to be taking the major role in digital financial education. That said, I think we have found that, particularly if you're talking about disadvantaged groups like refugees or people in rural areas, probably an app by itself is not going to be sufficient to bridge the kind of gaps that we're talking about. So that you do need some kind of on-the-ground program as well. And so the trick is how do you sort of combine those two forces? How do you have the apps, but also how do you supplement that with on-the-ground training by NGOs or whatever? So I think you do need that combination.
Okay, thank you, Peter. And I think, Jaki, you would like to jump in there with a few additional thoughts.
Yeah, sure. I think I can give what Peter is saying is true. When you come to now refugee populations, rural populations, what you will find is, first of all, device access is more in the feature phone level. So as much as you have your apps and you have your more enriched use, these fancy ways of approaching won't be quite useful here. And so the approach that the GSMA working with Grameen Foundation and MTN is taking on the ground now is what we call digital literacy change agents. So these are people who are members of the same community who are influential in the community, but can also pass on this information on both digital literacy, financial literacy, and the combination digital financial literacy, as Peter has already told us. So in Bidibidi refugee camp, this is in northern Uganda, the digital literacy change agents tend to be women. First of all, majority of refugees will be women if you're in the refugee camp. So it will be women who are either leaders or treasurers of the village savings and loans groups. So those are the ones you teach, and then they teach the rest of their group. And then they influence that way. And so what you end up having is, if this group has 20 women and you train the one woman who knows how to use this, over time, you will find that the others will also keep asking her. And whenever they're stuck, they'll go back and ask her. Then over time, you get to see now repeated usage. And that's where we start to measure the improvement of competency. So yes, in rural and refugee contexts, the use of the community and leaders in the community is an essential way to look at this. So I know some people might not want to hear this, but high tech, the apps, the fanciness sometimes is not what you need. We've actually even had to make the curriculum modular, print out pictures. This is a phone, this is the menu, this is where you click, this is where you click. Sometimes you have to go quite lo-fi in order to pass on this information. And now tying to what Lilian has said, that's a resource heavy way to do things. No doubt, going to the field one by one, it's tough to do, which is why this needs to be done in partnership with your mobile operators, your banks, and then also with government support, because these are big heavy hitters who tend to have resources for this. And so can also, and it's to everyone's benefit if you have coherent digital financial literacy across the board.
Yeah, absolutely. I mean, I think that really is the key take-home message here from us, is really that it's a huge undertaking, and that it requires everybody to be on the same page, a collaborative effort that brings in, all the major players, that brings in the regulators, the governments, NGOs, and the fintechs themselves around this. How do you feel that COVID, or how the pandemic may have changed things? And this is open to anybody here. Does anybody here think that that's had an impact?
Definitely, I think there's been an acceleration of the use of fintech products and services. I mean, both because people are afraid of kind of direct person-to-person transactions, and then you have all the lockdowns too, so that it's been much more difficult to do the old-fashioned kind of financial transactions, and perhaps riskier too. And so it's a no-brainer to try to shift more toward fintech type transactions. But at the same time, it's highlighted the various kinds of divides. Obviously, it's not so easy to do if you don't have access to the internet, or if you don't have a sufficiently powerful device. So I think that has underlined the importance of trying to have policies which will help to reduce those divides.
Peter, I mean, I think your research has looked at a number of projects in Asia that have tried to address digital financial literacy. Can you offer us any insights or models for how it's been done elsewhere?
Well, it's a little bit early. I mean, digital financial literacy has only kind of just been defined as a concept. So the next step is, how do we measure it? And so we haven't actually constructed an index of digital financial literacy, but that's very much on our list of things to do. So what we've done as kind of a substitute is look at what are people's awareness of digital financial services, both their awareness and use, and then try to correlate that with more traditional measures, for example, of financial literacy. And we find more or less the same thing, that it's, although we're trying to encourage financial inclusion, that typically the early adopters of fintech are those who don't really need it. I mean, those who have higher incomes, those who live in urban areas. So again, we're seeing, if anything, fintech is perhaps tending to magnify the various kinds of divides. Income, wealth, that sort of thing. So again, that shows that we need to identify policies that can help offset that tendency and increase the access of disadvantaged groups to those kinds of fintech services.
Thank you, Peter. So I mean, it sounds like essentially we have this consensus among us that digital financial literacy is of key importance to how we grow the sector in a sustainable way, and that there is both an ethical and a economic imperative for us to address this head on as a sector. And work with government and work with regulators to develop digital financial literacy. Just on a local note here in Mauritius, in just this past May 2021, the Bank of Mauritius has announced that it is joining the OECD INFE, which is the International Network for Financial Education initiative, to begin work on developing initiatives locally in Mauritius, because up to this point, we've had little pockets of initiative going on around financial literacy, but it hasn't had a coordinated effort. And I think it's a really positive note to see the local jurisdiction taking an initiative here. And what I hope to see coming out of this is a particular focus on digital financial literacy specifically, and not just on financial literacy. So I think it's good to see that things maybe are starting to be recognized. As you said, Peter, it's only very recently that it's even been defined on its own as an issue. I think that what we've seen from today's discussions is that a lack of digital financial literacy has, potentially quite negative consequences for personal financial management. It has implications for the traction that fintechs are able to gain in the local marketplace. And obviously it has also potentially reputational effects for fintech companies also, if people have bad experiences or lose trust with platforms. And these are all areas that we need to be aware of in order to develop a strong and healthy fintech sector. So without addressing digital financial literacy to assist consumers, fintech, it's much harder for fintechs to gain traction in the marketplace. And we look to, and we've seen that COVID has escalated digital transformation. This need has become more pressing, and we look to collaboration between fintechs and governments to help address this. So it looks like we don't have any more questions, and we're coming up on our time for today's session. So I'd like to take this opportunity to invite all those participants out there who might have questions and want to follow up with our panelists. You can reach out to them through the AFF platform. So do please explore, make connections, and put your questions through to us if you have them. Otherwise, I'd like to take this opportunity to thank today's panelists. Thank you to Peter, thank you to Jaki, and thank you to Lilian for joining us today. And I hope that you can enjoy the rest of your day and the other sessions. Thank you so much.
Okay, thank you.
Thank you.